Hi everyone, my name is Piterpakulski. Today we have a final overview of auto repair financial model. Um, I will be giving all the links on creation process of this model in the description of this video, so you can click on the whole process from the very beginning till the end to see how this model was changing from scratch. Till the cash flow statement, financing, payback period, and so on. So today I would like to show you what parameters affect financial efficiency of this business, what you have to pay attention to when you start this business, what parameters entrepreneurs usually want to play when the model is done and they want to see how flexible their business model is. So let's start. So our financial model consists of several tabs. The first four tabs are for different workplaces, so each auto repair business may contain different types of workplaces. For example, the first workplace is where you paint cars, the second workplace where you change parts. So you may have two workplaces where you paint cars, two workplaces where you change parts, for example, engines, gearboxes, and so on. So these four yellow tabs describing different workplaces that you have in your business. Then we have the model itself with the cash flow statement. Then so here it is. Here we build financial efficiency. Then we have the tab with the simple table with revenues, expenses, profitability. Then we have a simple diagram with payback periods, simple and discounted. Then we have a tab for internal rate of return calculation, where we set up the discount rate and a step of changing the discount rate to calculate the internal rate of return. Then we have a very important tab with sensitivity analysis. So here we have the grid where we change the parameter that we want to dive in. So and then here we will get the financial efficiency values, pressing sensitivity button, so we can link sensitivity analysis to any input in our model. I will be showing you how we can do that. So let's start from the very beginning. So we have a rule in our model that all inputs are colored with this blue color. All other cells are automized, so we don't need to adjust any formulas. So we start with the naming of all our services for each workplace. So for this workplace we have these types of services, so we can switch them on and off to include them or exclude them from calculations. So because when you are done with cash flow statement, you may want to, for example, see how this or that service affects the payback period. Maybe you are too optimistic, so you want to switch off this service and see what will be the numbers without this service. This is very important. This is very important when you are done with the whole model. So then we set up pricing for our services. Then we have the coefficient for pricing, because, for example, we don't want to adjust these values. We just want to play with these coefficients, because, for example, if we are done with cash flow statement, we just want to know what will happen if we increase, for example, pricing on 30%. So we can do like this, for example. We can change all this story, go to simple and discounted payback period. Here we'll be able to see how this affects this diagram. For example, if we so here we can see that the diagram a little bit went higher. So we can move back, return the previous values, so you can easily play, because usually entrepreneurs, when they have when they see the final picture of their business, they just want to play with different parameters without taking playing with these absolute numbers. So then we are moving to duration of different services. So it is very important to set up how much time would take to, for example, change the gearbox, the engine, and so on, because also we have coefficient to this duration, because duration affects the amount of services that you can do per day. This means that it affects the revenues, and when we will move to the next block of inputs, when we will move to schedule, we will be creating the relevant revenue generating algorithm, looking at the duration, because when you are done, well, let's just move forward and I will show you. Then we move to direct costs. So here we specify how much money parts cost inside the price of this service. Then we have a coefficient to direct costs, to parts, to increase or decrease, direct expenses. So this is the main block of inputs for describing the revenue, direct costs, and duration. The same story we're doing for all other workplaces that we have. So what we're doing next? Then we specify how many hours we are working per day. For Monday, Tuesday, Wednesday, we're doing the schedule. Then what we're doing next, we are taking each day of the week, and we're just trying to create some typical work day consisting of different services. So here we can add different services. We can see how the price is added, timing is added, direct costs are added, and what is more valuable, we can see the total revenue per day, how much time it takes, what is the direct cost, and what is very important, we can see how many hours it takes us to perform this amount of services. And in this case, we can see that we can't perform this amount of services because their duration is 12.4 hours while we have only 12 hours workday. So we have to decrease, for example, exclude some services, for example these services. So this will be okay. So, and usually entrepreneurs when they create this schedule, they start building trust to the numbers that they have at the end of this table. So they start their trust to the revenue, direct expenses are growing, because if they just operate with average check and they don't see the services behind the numbers, so this may play very bad part in their, when they face real business, real story. So they may face very bad surprises, because they will never reach the revenues that they planned inside financial model. So it's better to start creating typical schedules like this. So they just pulling the services from this table. Then they have the revenues, duration, then they look here, see whether it is relevant or irrelevant, see the time occupation, if it is okay or not. So they just start playing with all these services. They really can perform So and then they start looking at their business idea in more detail. So this is very important. So the same story we're doing for Tuesday. So we're creating the list of services for each day, Wednesday, Thursday, Friday, and so on. So for each day of the week. What we're doing next. So then we specify how fast we are reaching all these revenues. For example, when we open this workplace, we will have only 5% of revenues that we plan. On the next month we will have 10% and 20, 40. Here we can specify how fast we are reaching these numbers of revenues, direct costs, because when we start we may face some operating losses because we have we don't have the planned revenues right from the first month, so we will have 100% some losses, and we should calculate the amount of these losses to add them to the expenses on the investment stage, and this will form the final amount of financing that you need to start the business. So here we specify how fast we are going to the planned revenues. Then we add a seasonality block. So for example, our planned revenues that we created is 100%, and for example in spring and summer we have some decrease in revenues and direct costs, so we can set up inside the typical year. So here it is, we can set up the decrease in revenues and direct expenses to see how seasonality in revenues affects the all financial efficiency. So this is also very important. Then we have an investment plan. So this is the moment when we start operating activity for this workplace. Here is what we invest in, this is when we invest, and here is how much we invest during the investment stage. So for example, we have 3 months investment stage before we start operating activity, and inside this period we are specifying in what we invest in. These are the investment items, and here are the numbers of investments. So then we are moving to the fixed costs. So for example, rent, some equipment, and so on. So here are the articles for fixed costs. Here are the values of expenses per month. Then we are moving to the payroll. So here we specify we specify different positions of people. Here we specify the salary per person on one position, and then we specify how many people on this position works on the inside this workplace. So we just specify the people for one workplace. Then we specify the asset tax for this for this workplace, and then we are doing the same for workplace number 2, 3, 4, and then all this information. So we are moving to the core, and inside this core we have 4 workplaces. These places we can switch on and off these workplaces, for example. So we can switch cash flows, outflows from calculations. So for example, switch them off. We just have to wait while Microsoft Excel will calculate all this story. We also can move very quickly when we start the operating activity. So here in this table we can easily not only switch on and off different workplaces from calculations. For example, if we just decided to switch on all the workplaces and see how much financing we need, here we can see that what is the payback period. So for example, we just want to we see that we don't have so much financing. We just want to switch off all these workplaces and start with only one, for example. Then, for example, we want to open the second one, but we just want to open it using the reinvestment strategy, using the cash from the working of the first spot. So we'll just try to open it a little bit later, so for example in 2023 July. So let's look here, so we can see maybe in November. So this the next we can open using cash from the first two. For example, April. Or later, April, for example, August. And the last one we will open in, for example, 25. August in February. So we can see here how it works. So for example, this was the first spot, then we decided to open the second here, the third and the fourth. So and we can easily play with all these scenarios. Let me switch it on. So we can easily display from left to right a huge sets of data to perform absolutely different scenarios. So we can see I forgot to switch it on. Let's open it in for example May, to see how much financing we need. So for example, if we have only $1 million in pocket, so the strategy of opening the workplaces should be like this, for example. So this is the real speed of developing this business idea. So with this pricing, with this amount of direct costs and so on and so on, so this is very valuable. So also, for example, we can play with parts expenses, with direct costs, so we can easily increase, for example, or decrease. So if we want to increase the cost of parts, for example, on 30% for all workplaces, or for example we want to decrease the pricing on 20%, so we'll take only 80% of the current values. So we can see that this scenario is negative. so our business ID is not so stable as we can see. So using all these coefficients allow us to play with all these huge model very quickly, creating different scenarios, see how flexible our business idea, what are the strength points, what are the weaknesses. So we have coefficients to direct expenses, to duration, to pricing, to fixed costs, payroll, investment. So we can see the limitations of financing, the investment in one work spot, how this will affect the payback period. So this will be very valuable information for an entrepreneur when he starts the business. Then if we have a loan, we can specify when we take this loan, year, month, amount of loan, interest rate, term of loan, grace period for interest payments, for principal payments. Then we specify the rates of taxes. Then we move to the main statement. It is cash flow statement, where we are able to see the structure of revenues. We can press here plus and see the structure. So we can see how the rate appears as we open a new work spot. So we can see the revenues, direct expenses, we can see the result from operating activity. What is more important, we can see the operating losses. We can see these operating losses because they appear when we don't reach the revenues, maximum revenues right from the first month, as we specified here in this block of inputs. So these the data which we put here affects the cash flow statement, and here you can see whether you have or whether you do not have operating losses, and they should be added to the amount of financing that you need to start your business idea. So then you can see how much financing you need here. So for example, if you have so in this case we will need this amount of equity, this amount of loan. But for example, if we want to increase the amount of loan, the model will recalculate the amount of financing that we need from equity. So here is the amount of money from the pocket, this is the loan, and then we are moving from left to right to the cash flow statement. This is mathematical zero in cash balance at the end of the period, and then the project starts generating its own cash. So you can easily play with different scenarios of how much your own money you would like to invest in your business idea, how many what is the amount of bank loan you're going to take. So this is very interesting process, playing with all these coefficients, with all these inputs. So now you're finally, let's say, getting acquainted with your business idea, getting familiar with your business idea, see what amount of profit it can bring to you. So this is very interesting. So now then you have finally, you can see the revenues, expenses, profits. So you can see all this story. Then you see the simple discounted payback period. So here we open the first spot, then we open the second, the third, and the fourth. Then we specify the discount rate, specify the step of changing of this discount rate, and then, for example, we would like to see how, for example, let's say, let's go up, how the cost of parts affect in for example in workplace number 1, how this affects the financial efficiency. So what we do, so we just put here equals and multiply it on this red cell. So this is the coefficient. Then I press enter. So now this coefficient is added, and now I'm going back to sensitivity analysis tab, press sense. For example, I would just want to, my step of changing the coefficient will be not 5% but 10%. Here it is. And now I will test the financial efficiency of this business ID if I increase or decrease the cost of parts for the workplace number 1. So now I can see how simple discounted payback period, net present value, net value, profitability index, internal rate of return, total financing is changing if we increase or decrease the direct expenses. So the bigger direct expenses, the higher is simple and discounted payback period. So here we can see how stable our business idea is, how flexible it is. But for example, now we just delete this coefficient from expenses, and then for example we just want to add this coefficient to pricing. For example, for the workplace number 4. So we just do equals, multiply, sensitivity analysis, adding this coefficient, press and enter. So now we have our coefficient added to pricing for the workplace number 4. Then we go to sensitivity analysis. We can just delete this story and then press sense. So now we can play with all these coefficients with so we can add this parameter to any data in our model. We can even add this coefficient to specific prices, specific duration, specific parts, direct expenses. So we can play with all these inputs and see how flexible your business idea. So I hope now you understand how many parameters affect this financial model. I hope this video was valuable for you. You may give us a like, subscribe. I will be giving all the links to the process of creation of this model in the description of this video. You can subscribe our channel, share this video with your friends. You can also order financial models from scratch for your unique business ideas. So see you guys in next videos, new financial models. So see you guys in next videos. Thank you and bye.